Hi, I'm Rashanah Baldwin, a journalist, a Chicagoan, and a millennial bringing light to everyday stories that matter. I share the type of stories that mainstream media ignores or gets wrong. The news of the neighborhoods, the news that matters. Here is someone you need to know. Good morning. How are you?
I'm wonderful. How are you?
Amazing. I'm joined with Menia Johnson, the Assistant Vice President at Renovo Financial, correct?
Yes, ma'am. Assistant Vice President of Lending at Renovo Financial.
It's a lot happening in our world, as we know, from civil unrest to COVID-19. What is so much out here in terms of misleading information and what you should or should not do? What's the current state of your industry? What's happening? What are we seeing?
There's so much happening. I don't even know where to start with that question. As you know, pre-COVID, life was beautiful and harmonious. And in the lending world, we were ending or going into the last quarter of the last portion of Q1 and providing a lending solution to real estate developers from purchase and rehab loans, bridge loans, long-term financing. And then COVID happened. The world stopped. Our ability to do long-term financing was slowed down, really put on pause. And also a lot of other private equity lenders or hard money lenders like Renovo actually had to stop their lending altogether because I think week 1 or 2 of COVID, the secondary market took a huge hit. And so everyone was in a pause mentality. Um, but the good news is that we are seeing that developers and investors are still looking for investment properties. They're still investing, they're still building, they're still developing, they're still supporting the communities that we love so much, which is really the south side of Chicago. But they are also being very cautious and making sure that they're staying as liquid as possible, meaning that they want to keep as much money in the bank as they possibly can and really just decide on what types of projects are most important to build their growth in their portfolios or to build wealth in the communities that we serve.
You brought up a term that I like using, liquid.
Yes.
Before we even jump on that, I'm bad at giving introductions and clarity, but for clarity of this interview, Renovo Financial, you all lend money to investor developers.
Yes, so we are a private equity capital partner for experienced real estate investors who are looking to purchase rehab and or hold on to investment properties. We are definitely a relationship lender. We choose to partner with investors who potentially have had some challenges during their course of being a real estate investor, from not having enough capital or to not being able to close on time, because it typically takes the retail banks a lot longer than it takes us to close. And so we want to provide them as a solution in becoming a partner with them, a capital partner. So a lot of folks in Chicago do put us in that hard money lending world. I take a little offense to that because we're a little bit on the softer side, if you will. We're really in between a commercial, like your Chase Bank, and a hard money lender. We're private equity. We see investors for who they are, their experience, their stories, their liquid and cash position, as well as their business goals are all an important piece of us deciding if we're a good fit for each other.
You said a mouthful. Hard and soft. Does that mean that the money is being paid back quicker?
It is. So in the development world and in the investment world, all of our loans are short term. Well, typically for the purchase and rehab side, we typically write our loans for about 9 months, and the investors only paying interest only payments on their dollars, and they receive they close quickly within 10 business days. They receive their draw very quickly within 24 to 48 hours. And basically your draw is like, okay, I'm done with a portion of my project. Please now release to me the funds that I need to get to phase 2 or phase 3 or phase 4.
So people are nervous about what's happening with COVID,
Yep.
and you have a focus on the South Side, specifically African American women.
Thank you.
What could they do? What should they be doing with their assets? And should they remain liquid? Is this a time to continue your projects? I know you just said that you all paused, but now things are like slowly changing. What should a current developer be doing at the moment? Should they hold on to the cash that they have?
It really depends. Yeah, it really depends on the volume that they're used to doing. And so that's why it's so important for us to work with experienced investors, because they take a look at their entire business, right? Can they pay their contractors? Can they pay their own bills, right? Can they really afford to do another project? If they're in the middle of a project, thankfully things are starting to open back up. Inspections are still happening by the county. They have lifted the stop work order for most of the cities or the neighborhoods that we love so much. And so yes, if they are in a good capital position, that liquid word that we mentioned early, if they have cash money in the bank and they're able to successfully execute their projects that they have right now, yes, they should be finishing their projects so that they can either sell them, right, to recoup the money that they've put into their projects, or they should be refinancing because interest rates are a little bit lower now in the retail world, the retail banking world, where they're able to do a refinance, get some amazing people in there who are still working and who are looking for an amazing unit to rent. And so that's residual income for investors. Finish your projects, get in and get out. Time is money. The longer it takes to finish a project, the more money that you're spending. And so that does not necessarily help your liquid or cash position to stay strong through COVID.
Is this the opportune time to even go into investing?
If you're a new investor, if you have no idea what you're doing, absolutely not. I think even pre-COVID, if you have not taken a couple of steps, number one, gotten your credit together, saved some money, and by saving money, I'm not talking about like $5,000 or $10,000. I'm saying that when it comes to saving money to beginning the process of becoming an investor, it's very important that you look at what your life looks like on a monthly basis and have at least 6 to 12 months of cash reserves saved before you even consider beginning to be an investor. And yes, like there are so many different, single family homes out there. Everyone wants to get a 2 or 3 or 4 unit to live in. Now, there are some amazing programs out there with capital partners who are not like Renovo. If you are looking to build yourself an investment portfolio, this is now the time to do like a 203K loan. Get yourself a 2 flat, live in 1 unit, and let the next unit pay your mortgage. And that's you developing the understanding of how to be an investor, how to be a landlord. And then after a year or 2 and you've successfully kept your unit rented, then yes, why not go ahead and move on to step number 2 and buying your first fix and flip property. But if you have not done the due diligence in making sure that you are actually currently a good steward of your finances, now is not the time. No time really is the time to do that if you have not done the hard work first.
That I'm taking notes because those steps are really good in terms of, we know stimulus checks are coming. People have gotten extensions on their tax returns to file them, and they're looking to reinvest that money.
Sure.
And that step of buying a 2 flat first, living in the top unit, renting it out, and then moving on to step 2. Can you talk more about navigating that process? Because people are like, our people, Black people are, and it's like, we're dancing. We're
Yeah,
dancing.
like what do I do next? What do I do next? So
You go invest in the stock market. So yeah, can you go a little bit deeper into those steps? Because that's a way to
sure.
kind of come out of this, because no, I mean, no one is not paying attention to the news, and we're hearing the stock market is going down. They're already saying we're in a recession. I feel like what you just gave is some valuable jewels. So let me shut up and stop talking so you can.
There's more to it than just saving money and getting your credit together. But I do believe, especially in the Black and Brown community, there are some shortcuts to doing that. And I'm not necessarily against the shortcuts, AKA the credit repairman, not necessarily against him, but are we really learning a valuable lesson in taking a shortcut? Not really, because it's just a Band-Aid over the fact that for years, stewardship of our finances has not been a goal or a focus. And so I do believe that the reason why there is a lack of dollars in the Black and Brown community is because there's a lack of actual knowledge and acknowledgement of our own lack of stewardship in our dollars, in our money, and educating ourselves in real estate and investing. There's Google, number one. There's so many different learning platforms for real estate. There's so many different opportunities for us to actually go out there and learn what we need to learn, and maybe even partner with someone in the community who has successfully been able to build a real estate business, glean from those people, and then we can do it ourselves. So there's the education part, there's the acknowledgement part of, you know what, maybe I haven't been a good steward of my dollars. Maybe my credit isn't awesome because I spend. I sign those little forms that come in the mail to get a new credit card. I'm swiping away, but I have not yet either learned or acknowledged that I should be paying all of that back that I spend every month on a credit card, instead of letting it rack up. And now we have $3,000 and we're like, yes, I'm in the money. No, you're not. You're not in the money, because
Let them be great. Okay, let them be thousandaires.
I shall not let them be thousandaires. I want us to learn the value of that credit score, that number being the key to a lot of our financial success. If we want to buy back the block, if we want to open up commercial real estate within the communities in Chicago, how do you think that's going to happen if you go to the bank and you have a 520 credit score and $2,500?
So
It's just not.
what to do? Because this is very, like, right here. This is laser focus on some really specific information. That's good information for the Black community. Stimulus. We just said the IRS is giving people their opportunity to file their tax returns late, and individuals ended up with some cash, some thousands of dollars. And they want to invest. They want to start rebuilding their communities, because we saw a lot of the riots and tearing up. What should they specifically? Should you save the money? Should you pay down all your credit?
Then there's a couple of things that can be done. I think that community starts in our homes. And if we are teaching our children that we can be good stewards of our money and that we can pay our debts, that is where community development starts. It starts in our homes. It starts within our family, and within our source of reach. Like, who do you know who can help you? Who do you know that you could possibly invest in? If you know a business owner on the south side of Chicago, pick up the phone. Hey, was your store hit during the rioting? How can I be of assistance? Now, a lot of that has already happened, thankfully, with us coming together and doing board buildups and boarding up some of the places, especially along Cottage. I saw a lot of community coming together, helping each other, boarding up the stores in the area. But community really starts within our homes and with teaching our children the value of a dollar. And so, yes, the stimulus, it came. It's not a lot of money, but what should be done with it really is a personal preference. But I have encouraged folks within my reach to take a look at, you know, what is it that I need to be doing so that when I am able to go and buy something on the block or buy a single family home to rehab and get a family into a new home, I need to start with my credit. I need to start with saving. I need to start to make sure that if something should happen to my income, because we're not out of it. We don't know what the next couple of days will look like. So we should be making sure that we ourselves, before we try to invest in the communities, we are our own community. We need to be sure that we have 6 to 12 months of cash reserve just in case something happens with our income. And then we could think about, okay, now I have money saved. I can go into the community. I can purchase, a single family home or a condo or a 2 unit and begin to put dollars back, creating value on the block, one home, one business space at a time. But none of that can happen if we're not investing in knowledge, if we're not investing in ourselves, and if we're not investing in to make sure that our children and our family can survive if something should happen with our income.
So the best thing, what it sounds like, they should, if they do decide to invest or, um, become a developer, like you said, the education, the knowledge, the research, and taking care of yourself first. And I believe I heard you say possibly partner with someone in a community.
Uh, and that collaboration is so important, especially in the Black and Brown community. I think for so long there was a stigma of like, I got to do this for me. It's my time. It's my, and especially amongst Black women, that thankfully that cloud has lifted, and we're all sisters and queens now. It appears to be that way.
Was it an opportunity we wasn't? I'm joking.
But there was, a point where it was a go-getter mentality. But now, even pre-COVID, I've seen a rise in free education by just having conversation with folks who've done it before. And when you're ready and when you are willing to acknowledge maybe a lack of stewardship in your finances and you have a hunger to know more, partner with someone who has done it successfully. Be mentored, glean from those folks, and then take the necessary steps that you need to take to do it yourself. But then keep the ball rolling. And then now, once you've developed some knowledge and you've done it, you can then potentially even provide education to our young brothers and sisters, as giving them free mentorship as a developer or an investor, that and continue that cycle. Can you imagine how much the community would grow if we were deciding to offer something for free that we got for free? And then the ball keeps rolling and growing and growing. And so now we're all empowered by each other because we simply ask. That's all we have to do.
How can the Black community come out of this situation winning and not have a repeat of 2008?
Knowledge. Not just posting. I think the posts and the protests are awesome. I participated in some prayer marches last weekend, and I'm a woman of faith, and I believe that God is bigger than COVID. He's bigger than racism. Did he know all of this was going to happen? I mean, of course, because he's God. But I also do believe that if we lack knowledge, if we don't retain what we learn, it will continue to happen. And so if we are deciding that enough is enough, we have to begin here. We have to begin in our own hearts. We have to begin in our own wallets. We have to begin with our own credit score. We have to begin with making sure that our children can see the fruits of our labor. And then we have to come together and partner. And, back in the day, my parents and their folks, they used to all live in one big old house. Why did they do that? They saved their dollars. They utilized what if they lived very simply. They didn't live these extravagant lives, but the families had businesses and money together because they came together and agreed on one thing, that wealth was important, that generational knowledge and wealth was important, and that having income was important. And so the easiest way to do that sometimes, and families all over the world, not just Black and Brown communities, but other cultures, that is literally how they build wealth, is that they bring all of their dollars together and then they buy, and then they save, and then they buy, and then they save. So in the spirit of collaboration, it's maybe some conversations that we should be having with our family. And maybe one of the first steps in those conversations is reconciliation, because maybe there's some bad blood there and some reconciliation needs to happen within our families and within our communities. And then we can have a conversation about, well, I only have $5,000. How many dollars do you have? Okay, well, you have 10. Okay, well, you have 2,000. You have 15. Let's maybe create a business entity underneath our family's name and put all of our dollars in together, hire a contractor who has experience and get a mentor who is a developer or an investor. And let's maybe partner with them to buy our first building together. And now the whole family has residual income.
Should people be concerned about rents? Because that scenario is absolutely a perfect scenario. And
Yeah.
we heard in the conversations and in the neighborhoods, we're going to rebuild our block. It made me the thought popped into my head. I go buy a property, we partnered, we got together.
Mm-hmm.
Should we be concerned about people being able to afford and pay their rents, or even the real estate industry itself?
So the rent control and the rental issue, that's just been a conversation even pre-COVID, pre-2008. And so I think that because there's so many opportunities out there for people to actually work,
Mm-hmm.
that if you
Give me some examples. Give us some examples.
if you pre-screen your tenants and they're working at Walmart, at Amazon, because they're still hiring, Taco Bell, anywhere, there's opportunity for employment regardless of the market. And so I think for so long we've used the excuse of, well, I got laid off, I'm just going to collect unemployment. That's awesome, but you can still pay your rent, or come up with an agreement with the landlord to maybe pay, half this month, the rest next month, while you're looking for another job, getting creative, becoming an entrepreneur, trying to manifest, your own creativity while you're waiting for the next opportunity. But I have a client that literally sent a list of all of the places that were hiring to each one of her tenants who were laid off.
Got it. Wow.
There's always opportunity for employment.
Okay.
And it's up to us to decide as a people if we're just going to sit back and make an excuse and say, well, I'm not paying my rent this month. Number one, it goes back to stewardship. This is why there has been centuries of despair, because there's a lack of stewardship. Now, granted, if your salary was $60,000-$70,000 a year and you got laid off and you're like, okay, what am I going to do? It might take you some time to find a position that meets your financial needs, but there are always still options. There are always still options. And so I think that if someone was looking to get into real estate and do a 203K loan, which I cannot provide, but you would get that from a traditional lender, you would want to work with a real estate agent that can help you pre-screen your tenants, so you don't necessarily have to worry about that, or apply to be a landlord that receives a tenant that receives Section 8 so that you can get your vouchers. So there's knowledge.
There you go. You're spitting the knowledge out. And I know
it goes back to knowledge,
Yeah. And everything you said is dead on, spot on. Do your research, collaborate. I know you have to go in a few minutes. I have a last question and a half.
Sure.
What is Renovo Financial doing to protect and educate specifically the Black and Brown communities?
So I am I have the pleasure of being a part of our CDFI. So we're one of the only for-profit CDFIs, and that's a community development financing institution for LMI neighborhoods as well as for women of color. And so as you and I we spoke last week, really about it's not my job to convince anyone to go into debt. Yes, I'm a real estate lender. Yes, I lend money. However, I do that cautiously. It is never my desire or intent to be in a hurry to just get another deal done if they're not well educated in what they're trying to do. It's my job to listen, to hear, and potentially even act as a consultant versus saying, well, I need to get paid, so you need to get a deal done. That's not how we operate. It really is a partnership at Renovo, and it's my desire to meet new Black women, brown women, Hispanic women who have already been doing the work of purchasing, rehabbing, and investing their dollars in low to moderate income areas in Chicago. And so we have and will always have, Lord willing, short-term loan products that can help our clients execute quickly, building wealth, generational wealth and knowledge into their children and into their businesses. And if they're just calling me to ask questions, that's what I'm here for as well. We don't necessarily have a specific plan because we've been doing this for almost 11 years. I've been with the company for 7 years, and I have had the pleasure of working with so many amazing Black and brown investors to help them literally get their portfolios to the goals that they have, whether it's doing 5 deals a year or 10 deals a year. They know that they can come to me because we are a reliable source of capital for them.
Last question. When those individuals who are not quite ready for a deal or even are very new, a novice to it, do you refer them out to do you refer them to additional resources or work with them in any capacity to help them get to that level, ready to pull a trigger and invest or get their financial weight up?
Yeah, so I would say that I have these conversations multiple times a day, and I like to call them introductions just in case the referral doesn't work out and then they don't really necessarily vibe and there's no chemistry. Never want anyone to say, well, Menia, you introduced me to this person, you referred me to this person, and they're awful. I call them introductions. So yes, yes, I have done that. There are so many different programs within Chicago that can help educate them. Pre-COVID, our C3 fund, which is our CDFI fund, we host a education or an informative event every quarter to assist the newer investors in understanding rents and managing a property, etc. So we do have some resources ourselves, but we are still in COVID time, so we're not meeting with folks, but I will definitely do some introductions for especially women in real estate to help our novice ladies get some knowledge in investing here in Chicago.
Do you see, or is there an increase of Black developers that you all are helping? Have you seen that increase, or is it an increase? Yeah, is it a lot of Black women coming into your assistance?
Yeah, I think over even pre-COVID, there has definitely been a rise of the woman, if you will, in the last 18 and 24 months. And I have been so honored and blessed to meet, I would say maybe 5 to 7 since January, who have been doing the work before being introduced to me and who wanted to have a reliable source of capital and were introduced to me because they know that Renovo is a reliable source of capital. So yes, I do believe that there is a rise of the African-American woman and the African-American man in real estate, teaching each other and collaborating so that we can buy back the block.
All right, thank you, Menia Johnson.
You're very welcome. Thank you, Rashanah. I appreciate you so much.
Stay safe out there and keep lending in our community.
I shall. Thank you so much.